Hi friends, welcome to the lecture on treatment of outstanding expenses when we are preparing our final accounts. Okay, I think many students feel that this topic is very tough or it is very confusing. So I would like to make this topic very simple for my students. So we learn how to treat outstanding expenses in the preparation of our final accounts. Okay. Before we start learning about the treatment of outstanding expenses, let us first of all learn what are the various entries which we are going to pass relating to expenses. Now what I'll do is, let us take the example of an expense called as salary. In your factory or in your company, there are many employees working. Let us say there are accountants working in your organization. There are managers working in your organization. There is marketing staff working in your organization, and staff has to be paid salaries. Now, what are the various entries which we pass relating to salaries? Let us learn that first, and once we have learned that, we can proceed to learning the treatment of outstanding expenses in your final accounts. Okay. Now, when salary is paid in cash, this is the entry we pass. When we pay salaries in cash for a month to an employee, at the end of a month we have to pay salaries to our staff. When we pay salary in cash, what is the entry we are going to pass? The entry we are going to pass is salary account debtor to cash account credit. Now, you would like to know the logic behind passing the entry. The logic behind passing the entry is, salary is a nominal account, it is an expense and a loss. That is why this account is debited, and we are paying cash for an expense called as salary. We are paying cash. Cash, it is going out of the business. Cash is a real account. It is going out of the business. That is why cash account has to be credited. So when we pay salaries in cash, we pass the entry salary account debtor to cash account. Logic is salary nominal account, expense and loss debit, cash real account going out credit. Okay. Sometimes we pay the salaries in check. We might be paying salaries in check. We issue checks to our employees for salary. So when you pay salaries in check, what is the entry you pass? Again, for an expense called as salary, we are issuing a check. When we issue a check, our bank is going to pay money to the employees. So money of the company is deposited in the banks, and when we issue the checks to our employees, the bank will take the responsibility to transfer money, to pay money to our employees. So for an expense called as salary for the business, bank is paying money. So how do we record an entry for this transaction? Salary is a business expense. It's an expense for the business. Salary, nominal account, expense and loss. It has to be debited in our books of accounts. And who paid the money to the employees? Bank paid the money to the employees. So bank has to be recorded as the giver of money. Bank becomes the giver of money. So bank, personal account, giver. That is why bank account has to be credited. So when you pay salaries in check, you are going to pass the entry salaries account debtor to bank account. Salary, nominal account, expense loss debit, bank, personal account, giver, credit. So when we pay salaries in cash, we pass the entry salaries account debtor to cash. When we pay salaries in check, we pass the entry salaries account debtor to bank. Now, let us say for the month of December, your staff has worked very hard. You have to pay them salaries, but your company is having insufficient cash. It's not in a position to pay the salaries to the employees. They are going to be in a position to pay the salaries, let us say, in the next month or in the coming months. Management is confident that they may not be able to pay the salary of December, but after 2 or 3 months, they will be able to generate some cash and they would be able to pay the salaries to the employees. So let us say, for the month of December, your staff has worked, you have to pay them salaries, but because of lack of cash, we have not paid the salaries, we have not paid cash. Now the question arises, should we record an entry? Workers have worked, employees have worked, we have to pay salaries, but because of insufficient cash, we are not able to pay salaries. Because you are not paying salaries, are you going to not record any entry? This is the question that arises. The answer is, in our double entry system of accounting, generally we follow the accrual basis of accounting. We don't follow the cash basis of accounting. So, because the workers have worked, the employees have worked for the month of December, the company has already received benefits from the workers. So the salary which we have to pay to the workers has to be recorded as an expense immediately. We cannot wait for payment of cash. So as soon as the workers have completed their work for the month of December, we have to record the salary for the month of December as an expense in the books of accounts. We cannot wait for the payment of cash. So we are going to debit the salary account because it's an expense for the business. We have already received the benefits. So you have to immediately record the salary which has to be paid to the workers as an expense in our books. We cannot wait for the payment of cash. That is called as the accrual concept. Now, see, we have to pay salaries to, let us say, 50 or 60 employees working in our organization. We have not paid cash to them. We have to pay cash to them. So till the time we pay cash to them, we have to record those employees as creditors to the business. They become creditors to the business because they have worked. Their salaries are there with us. We have not paid them cash. So till the time we pay the cash to them, we have to show the workers in the books of accounts of the business as creditors. It is not possible to record the names of all the workers in our books of accounts. So instead of recording all the workers as creditors in our books of accounts, we keep a register, and that register is called as the outstanding salaries register. And in that register, we are going to write the name of all the employees to whom we have to pay the salaries relating to the month of December. So the salaries for the month of December are due but not paid. How do we record an entry? We have to immediately debit the salary account because the salaries for the month of December are an expense for the firm. And the amount is not yet paid to the workers, to the employees. We have to show the employees as creditors in our books of accounts because their money is lying with us. We cannot show the names of all the workers in this entry. So instead of writing the names of all the workers as a creditor, we write the name of a register called as the outstanding salaries register in this entry. So outstanding salaries account is credited. So what is the entry we pass for? Salaries due but not paid. The entry is salaries account debtor to outstanding salaries account. We recognize the expense and till the time we pay the money to the workers, we have to show the workers as creditors in our books of accounts. So we show the workers as creditors in our books of account because we have to pay them money. They have worked, they have given us benefits. So till the time we pay money to him, they become a creditor to the business. Okay, so when salaries are due but not paid, this entry we pass. Salary account debtor to outstanding salary account. Okay, now when outstanding salary is paid in the next year, I told you management is confident of paying the outstanding salaries after 2 or 3 months. Next year they have sufficient cash. So now they repay the loans. Now they are repaying the workers their salaries. So outstanding salaries are now being paid to the workers. Now what is the entry we are going to pass? We are now repaying the liability. Now, so the entry we are going to pass is outstanding salaries account debtor to cash. Here we are now going to show the workers as receivers of money. We are going to reduce the liability and we are paying cash, or if we pay check, we record cash or bank as credit. So when salaries are due but not paid, we record the entry salaries account debtor to outstanding salaries account. When outstanding salaries are paid in the next year, we are going to pass this entry. This is the repayment entry of the loan. The loan is being repaid. Outstanding salaries account debtor to cash and bank account credit. This is how the loan will be repaid in the next year. So I'll revise. When we pay salaries in cash, the entry we pass is salaries account debtor to cash. When we pay salaries in check, we pass the entry salaries account debtor to bank. When salary is due but not paid, or when say the salary has become accrued, we have not paid cash. So immediately you have to record the salary as an expense, and till the time we are going to pay the money to the workers, workers have to be shown as a creditor in our books of accounts. So we are going to pass an entry, salary account debtor to outstanding salary account credit. Workers will be shown as creditors. Next year, when we repay the amount, when we pay the amount to the workers, we have to now reduce the liability. We pass the entry, outstanding salaries account debtor to cash, but this entry will be passed in the next year. So this is how we are going to write entries for expenses. I have taken the example of salary for explaining you the concept. Okay. Now we are going to learn how to treat outstanding expenses in final accounts. I will take up a small problem, then we will solve this problem to understand how it has to be treated. I am going to take a small part of a trial balance. I call it as extract of a trial balance. Particulars, debit, credit. Now, let us say in the trial balance, salaries are shown at 1 lakh. There are no credit items. I am going to stop the trial balance here. I am going to take only one item in the trial balance. Okay. And in adjustments, you are given some information. Salary outstanding 20,000 not recorded. So you have a trial balance in front of you. The trial balance shows salary, debit balance 1 lakh. And in adjustments you are given salaries outstanding 20,000 not recorded. Now how are you going to deal with this trial balance when you are preparing your final accounts? Now, before we continue, can you tell me how salaries is showing 1 lakh rupees debit balance? Now, salaries account is showing 1 lakh debit balance because during the year, let us say this trial balance belongs to the year which is ending on 31st December 2012. So during the year, let us say we have paid 1 lakh rupees as salaries to our staff. So we have already passed the entry, salaries account are to cash. Salary account was debited with 1 lakh rupees. Salary account is showing a debit balance of 1 lakh and that is being shown in the trial balance. But outside the trial balance, some more information is given to you. Salary outstanding 20,000 not recorded. So outstanding salary of 20,000 has not been recorded. How do you deal with this information when you are preparing the final accounts? I hope you would have noted down this small problem. Now I will proceed and I will solve the problem for you. We are going to use two accounts, the profit and loss account, and we are going to use balance sheet. Profit and loss account for the year ended 31st December 2012. Balance sheet as on 31st December 2012. Particulars rupees. Particulars rupees. Balance sheet. Liabilities rupees. Assets rupees and rupees. Now our final accounts are ready. How are we going to solve that problem? I hope you remember in the trial balance, salaries was given as debit balance 1 lakh rupee. Where do you show salaries in your final account? Salaries is a indirect expense. It is shown in the debit side of the profit and loss account. So we show salaries in the debit side of the profit and loss account. Two salaries. I will show it in the inner column. 1 lakh rupees. Salaries is shown in the P&L account debit side in the inner column 1 lakh rupees. So the amount of salaries which were given in the trial balance have been transferred to the profit and loss account and it is debited there. I hope you remember below the trial balance there was an adjustment given. What was the adjustment? Salary is outstanding 20,000. It was not recorded. No. I hope just now we have learned an entry. What is the entry you pass for recording outstanding salaries? Should you not record it? As per the accrual concept, whether you pay salaries or not, you have to record it. So what is the entry we write for outstanding salaries? The entry we are going to pass is salaries account debtor to outstanding salaries. But this entry was not passed. That is what the information was given to us. So how do you pass the entry? The entry we are going to pass is salaries account debtor to outstanding salaries account credit 20,000. So this entry should have been passed, but this entry was not passed. So this entry was omitted. Now, how are you going to rectify the mistake? So I have passed this entry. This entry is called as an adjustment entry. Now I have to give effect to this entry in the final accounts. Without passing this entry, without giving effect to this entry, if I prepare my final accounts are wrong. Because they have been prepared based on a trial balance which is not correct. The trial balance is not correct because one entry was omitted. So our final accounts will be wrong if we have omitted this entry. Now I want to rectify my mistake. How will I do that? Now just see this entry. The entry we have passed is salaries account debtor to outstanding salaries. Now we have to give effect to this entry directly in our final accounts. Now if you see the entry, this entry is asking you to debit the salaries account. This entry says salaries account should be debited 20,000. Salaries account is already showing a debit balance of 1 lakh. Again, if you debit the salaries account balance will increase. It's already showing a debit balance of 1 lakh. You have to again debit the salaries account. The salaries account balance is going to increase. So we have to give the same effect in the profit and loss account. We'll write here, add outstanding salaries 20,000. So if this entry was passed, salaries account would have been debited, and if it would have been debited, the salaries account balance would have increased. So the same effect I am showing in the profit and loss account, because salary account is already hiding in the profit and loss account. So I have increased the balance in the salaries account. So I have given effect to this entry. Now I have to give the second effect also. Because of this entry, outstanding salaries account should be credited. Because of this entry, outstanding salaries account should be credited. Now, because of this entry, a new account will be opened in the background. Outstanding salaries account. This account will be credited by salaries 20,000. Because of this entry in the background, an account will be opened. It is called as the outstanding salaries account. This account will be credited. Now, if you have passed this entry, if you open this ledger account and this posting is given, now what will happen is, this account will be showing credit balance. It's showing a credit balance, the personal account. It is showing a credit balance. They are creditors for us. Outstanding salary is nothing but the workers' personal account. They are workers. Their account is showing a credit balance. So it's a personal account showing credit balance. So till the time we repay the amount, it has to be shown as a liability in the balance sheet. If you see this account is showing a credit balance, a personal account, credit balance. It should be shown on the balance sheet liability side. So it will show outstanding salaries on the balance sheet liability side. And this amount will be added, and we have to show 1,20,000 rupees in the outer column of the profit and loss account. So when outstanding salaries have not been recorded, we have to pass this entry. This is called as an adjustment entry. Salaries account debtor to outstanding salaries. Now we have to give effect to this entry directly in the final accounts. Salaries account has to be debited 20,000. Salary account was already showing a debit balance of 1 lakh. You are again going to debit that account, balance will increase. So the same increase I am showing in the profit and loss account. Now because of this entry, outstanding salary account will be opened. This account will be credited. This account is showing a credit balance. It's a personal account. This account is nothing but the personal account of the workers. They are creditors. So you have to show this balance in the balance sheet liability side. When outstanding salaries are paid in the next year, we pass the entry outstanding salaries account debtor to cash, and the outstanding salary account will be closed. I hope the treatment of outstanding salaries or accrued expenses becomes very clear for you.